If you've been watching the markets over the last few days, you've probably noticed something unusual happening across the entire crypto space. A wave of caution, hesitation, and sudden pullbacks that seem bigger than the usual volatility. And while many analysts point to macroeconomic pressures, interest rate uncertainty, or typical end-of-year repositioning, there's another story unfolding beneath the surface. A story tied directly to the sharp crash in Trump family, linked crypto stocks and digital asset holdings. And whether you support the political side of it or not, the financial impact is real, and it's creating ripple effects across both crypto and tech sectors in ways many investors didn't expect. The truth is, markets don't just react to numbers. They react to narratives. They react to headlines. And when a high-profile name like Trump appears next to the words crypto losses, market crash, or regulatory concerns, it sends a signal, not just to retail investors, but to institutions, hedge funds, and even lawmakers. Suddenly, crypto isn't just a financial asset. It becomes a political talking point again. And that shift alone is enough to shake investor confidence. Now, let's break down what's happening behind the scenes. Over the last week, several Trump family associated crypto ventures, including stocks tied to blockchain media platforms and tokens connected to campaign-adjacent projects, experienced a steep decline. Some of these assets dropped sharply after reports of liquidity concerns, regulatory scrutiny, and large sell-offs by early investors. When names associated with a former president start appearing in market fear cycles, sentiment changes almost instantly. Traders begin pulling back. Algorithms automatically reduce exposure, and institutional desks flag elevated political risk across the entire sector. But here's the bigger issue. These declines didn't happen in isolation. They triggered a narrative that spread across the market, a narrative that suggested increased regulatory action might be coming, especially if major political families are seen taking losses or being linked to unstable crypto ventures. Even a hint of regulatory tightening is enough to create massive tremors. We've seen it before with the SEC's actions against exchanges, with congressional hearings, and with every high-profile crypto scandal over the last 5 years. The market reacts not to what regulators do, but what people believe regulators might do. And that's exactly what we're seeing now. Investors are not selling because of fundamentals. They're selling because of fear. Fear of new rules, fear of political backlash, fear of headlines that haven't even been written yet. The ripple effect is spreading far beyond the Trump-linked assets. Bitcoin and Ethereum saw temporary slowdowns in momentum. Mid-cap altcoins that rely heavily on speculative inflows experienced sudden drops in trading volume. Even tech stocks loosely associated with blockchain innovation showed weakness, as traders treated them as part of the same risk cluster. This is how sentiment works. It spreads quickly, often irrationally, and it doesn't always reflect underlying value. But if enough people believe the market should pause, the market will pause. Another factor amplifying the situation is the media cycle. News outlets love political financial crossovers, and stories linking the Trump family to crypto losses are generating strong engagement. When that happens, the spotlight shifts back onto the entire industry. Regulators know the public is watching. Lawmakers know voters are paying attention. Journalists keep digging. And investors respond by reducing exposure until the noise calms down. The market isn't crashing, it's bracing. But here's the interesting part. Historically, crypto has always rebounded stronger after politically driven sentiment dips. Why? Because long-term investors know the difference between temporary narratives and real structural weakness. And today's situation looks far more like a narrative storm than a structural problem. Regulatory clarity, whether strict or supportive, tends to drive long-term stability. And moments like this often become buying opportunities for those who understand market psychology. Still, it would be a mistake to underestimate the short-term effects. Retail investors tend to follow emotional cues, and political news triggers emotional reactions faster than economic news. When a prominent political family takes a financial hit in crypto, people automatically assume the entire sector is unstable, even though most of the market has nothing to do with these projects. It's irrational, but it's also predictable. And smart investors know how to separate signal from noise. What should the average viewer take away from this? First, understand that sentiment-driven dips are part of the crypto cycle. Markets move in waves, and sometimes those waves are driven by external stories rather than internal fundamentals. Second, recognize that political names entering or exiting the crypto space create outsized reactions because people attach meaning to them, meaning that often doesn't reflect the reality of the broader market. And finally, remember that these moments force regulators, institutions, and the public to rethink their relationship with digital assets. That can slow things down temporarily, but it can also accelerate maturity in the long run. Before we wrap up, here's the real takeaway. The current caution in the market isn't about the Trump family's losses. It's about how investors perceive risk when politics and crypto collide. It's about uncertainty, not insolvency. And when uncertainty clears, as it always does, markets tend to recover faster than people expect. If you found this breakdown helpful and you want more clear, unbiased analysis on crypto, markets, and the financial stories shaping the economy, make sure you like this video, subscribe to the channel, and hit the notification bell so you never miss an update. Thanks for watching and stay informed, because in today's financial world, understanding sentiment is just as important as understanding price.